2 years ago, I had predicted that Nifty can reach 17,000 to 17,500, and this was nothing just because of head and shoulders pattern. And today we will learn about head and shoulders and inverse head and shoulders pattern. You can see Nifty had given inverse head and shoulders pattern breakout above 12,000, and I had said that this target will be achieved within 2-3 years. And you can see market had surpassed this target also. So today we will learn about head and shoulders and how we can trade about it. And you can see there in our group we had said that another member had asked a query regarding the Gland Pharma, and we had said that Gland Pharma has also given a head and shoulders breakout, and this is bearish and we can fall, and in the coming months it had fallen a lot. And let us see the details, and we will combine these details with Elliott waves and show you practical examples. And this is a head and shoulders how it looks like, where you will find a left shoulder, a head, and a right shoulder, and then the projected target is the total height of this head from the neckline. So this is just a visual, and let us see the finer details in this. You can see that while forming the head and shoulders, you can see the volume is very low. However, on the breakout, when the confirmation comes, the volume should expand. And this is one of the most important characteristics, that volume should expand when there is a breakout. This phenomena and this characteristic is mostly ignored, and people usually just see the form, and that's why they get stop out. And prior condition, like if it's a bearish, prior trend should be up, then only it will be a reversal. So let us move forward and see. This is the other case of bullishness of inverted head and shoulders pattern, in which we have a left shoulder, the head, and the right shoulder. And again, the breakout comes with huge volume. And whereas once the pattern is formed, we see there is a low sort of volume which expands when there is a breakout. Now let us see how we can combine Elliott waves with this head and shoulder, classical head and shoulders pattern. And this will help us to eliminate the false cases. You can see there is a trending move 1, 2, 3, 4, 5, and this is 5-wave impulse. After that, you get once the correction start, and we know that correction can be minimum 3 waves, and ABC is one of them. You can see how A reaches the low of 4th wave, and this is where a true neckline exists. Once the wave A is formed, then there will be a corrective wave B, and once this breakout happens, this results in a true head and shoulders pattern. And target can be the total height of this neckline to the head, and that is the measured target. Important point is that this wave, the neckline starts where the wave 4 ends. This is one of the most important characteristics and usually ignored. Now let us see the example of this, in which this is a bullish case where you can see price falling down in 5 waves, 1, 2, 3, 4, 5. This is a C wave overall. C wave is 5 wave, 1, 2, 3, 4, 5. And you can see how the left for the neckline we have pointed out near 4th wave, and once the breakout happens, this is normally the third wave of the fresh impulse, which means 1, 2 are beside this neckline, and the breakout happens in the third wave. Important point is that for true head and shoulders, inverse head and shoulders, the breakout, the neckline happens on the 4th wave of prior trend. So let us see the false neckline. In this case, you can see although the price goes up in 1, 2, 3, 4, 5, the A wave does not retrace back to the 4th wave. low. And in between the B wave is now the head in this case, and it goes above this fifth wave. The difference between this false case and true case is that this A wave does not retrace back to the fourth, and neckline is above this fourth wave, which means this is just a correction and main trend is up. The only criteria of trend reversal is that prior wave should be 100% retraced. And in this case, you can see the total retracement is not 100% and it is just partly. This important criteria is often ignored. So let us see in future slides how some examples for this case. This is a positive case, and you can see this is chart of Nifty and how beautifully these head and shoulders pattern work. Patterns work both at the top and you can see at the bottom also how these patterns usually provide results. Before moving further, if you're enjoying the content, you can follow our Telegram channel Stock Market for Beginners and our YouTube channel Sunny Dar. If this content delivers value, please consider subscribing and sharing feedbacks. Now this is the example of false neckline. This is the daily chart of Muthoot Finance, and you can see although this chart pattern looks like a left head and shoulders pattern, but this is a false neckline. False neckline because this neckline is not passing through the wave 4. However, this looks like a head and shoulders and many get trapped when this breakout happens. And you can see in this chart, once this corrective structure is over, the main trend that is up is resumed. So we note a critical point here that if the wave 4 of the prior impulse is not breached, then all these structures are just a small correction and then one more push to form the main trend. I hope this is clear now, and let's move further. Now this is the weekly chart of the same stock, Muthoot Finance, and you can see how inverse head and shoulders pattern at the start of this helped the investors to invest in this stock. This was a bullish pattern, and right at the start of this chart, we can see this formed and then the target was achieved. So having a knowledge of this bullish pattern really helps, and you can really initiate long trades for in long-term investment using this simple pattern. I hope this video helped you in making and realizing how true a inverse head and shoulder looks like and what are the important characteristics. Now take example of this chart, that is Reliance. This is the daily chart of Reliance, and you can again see a head and shoulder inverse head and shoulders pattern formed, and this target was also achieved. So we have looked that if you see these chart patterns on higher time intervals, say daily, weekly, or monthly, then the possibility of target achieving is even more. So when we apply technical analysis to higher time frames and take decision based on them, then the probability of reaching the target is higher. So that's all.